So hello everyone. I hope that you had a wonderful week, right? I hope that you were, mostly being patient. And if you traded more than, you know, once or twice, I hope that you had success. And even if you didn't have quote unquote success, but you managed to, manage your risk, then that, you know, means that you have been successful, right? As long as you don't blow your account, which is something that is the most probable you know cause whenever someone new enters the marketplace, and you're not that new, right? That's the number one thing that you must focus on, right? Risk management. You should always remember that. Anyways, yes, today we will be talking about entries, right? And just to go over a few things, right? I'll just like try to pick out some of the topics that we went over so far, so you guys know what we have went over so far, right? We've talked about precision levels, right? Precision swing points, precision candles, sequential SMT, intermarket sequential SMT. We introduced three tribes, and we did talk about gold, in relation to silver and the dollar index, but we have not been into that a lot, right? So that's four tribes right there, right? We've talked about true opens, which you've known before. We have came into this mentorship. We've talked about revolving true open. We've talked about stack true open. We've talked about high probability breakers. Most of what we talk about revolves around the economic calendar, so you already know about that. We talked about expansion divergence, right? Get one gap versus two gaps, right? We've talked about, FPG's balanced price range mostly when it comes to PD arrays, right? We don't really focus on order blocks or, things like that. Only thing that we, reference to as a order block is just usually a precision candle or a precision swing point, because otherwise it's just, fake and rarely works, right? We talked about symmetrical lows and highs, right? SMT lows, SMT highs, the magneto effect, a hidden SMT, and we have begun to talk about doubling theory a bit, right? So, and we've talked about a lot of other things. It's just for the reasons of time, right? We won't list everything, but what I just talked about, are the most important aspects to quarterly theory. What I just talked about, or basically, the fundamentals of QT, which or what you know now. All you really need is four, out of just four things that I just talked about, with the economic calendar being the base. You need that there, and but you don't need sequential SMT, but it's either sequential SMT or precision swing points, or the both of them to, increase your accuracy, right? So yes. And of course, there will be, we will have to eventually have a lecture, whereas we will have to, just begin to dig deeper into these concepts, right? There's a lot, right? And if you're someone that needs more right now, you need to understand that you don't need more right now, because there's a lot. You need to understand what you already have now, because yes, you'll be getting more, but even when you get more, right, it will just make you like a addict for information. But at the moment, you need to be, becoming better with your approach to trading and analysis, right? You need to find what works for you, and you need to find what's, the easiest thing for you to spot, right? The main thing to take away from all of this is that you need to understand when markets are, prone to move, when markets are prone to, reverse, right? And when they aren't, which is another totally important topic. You need to know when not to do anything. You need to know when not to trade. That is important. You need to know when you will have the low probability moves taking place in the marketplace when you should leave price alone, most of the times. Like, for example, last week, right? Was it, a fluke, a mistake? Why didn't I go live on Thursday? Because price was not clear, right? Whenever I don't go live, it means that I'm not looking at anything. Whenever I don't go live, I'm just waiting for more information. And as you guys know, less than a month from now, well, I think it's around 30 days, 29 days, we will have the US elections. An event that we have been waiting for this entire year. Well, I've been waiting for this for like 3 years now, but you understand what I'm trying to say, right? We will have a lot of volatility, and as you guys know, and you will see in the marketplace, we will have, one asset consolidating most of the times, or one asset class consolidating most of the times when we're comparing the FX to the FX market to the futures market, right? And we're just using that for now because it's easier, right? You don't need to be looking at too much assets at the moment, right? We've talked about, previous assets before, but, most of the moves when taking place, are visual. You can visualize them by just comparing the FX triad to the futures triad, right? What do I mean by that? At times, right, I've said this before, you will see consolidation within the FX market. And whenever you see that type of price action, you should expect expansion or expansive moves within the futures triad, right? And vice versa, right? Whenever you see consolidation within the futures market, then you usually have expansion during the FX marketplace, right? And people asking, are we going to talk about entries? Yes, you will. Of course, I will. I'll talk about entries. Take notes, because I'll just, throw them in there for you to take notes, right? You need to be paying attention. And whenever I throw them in there, I'll tell you that you need to take notes. Whenever I tell you that you need to take notes, you just need to take notes, right? You don't need to ask about, will I receive this? Will I receive that? I know what you need to receive, right? There's a lot of you. I know what you lack. I know what you don't. I know what you understand, right? You can see that, there is a good number of you guys that are already profitable. Already, you're good with analysis, which is the main thing. You need to be good at analysis, right? That's the main thing. That's the main reason of this. You need accuracy. Well, you don't need accuracy, but, I need you to have accuracy, right? You should be, inhumane when it comes to this thing, right? So just listen, pay attention. Don't talk about anything that, I'm not talking about, right? It's not, if I don't talk about it right now, then it's not, important right now. And then I will cover it, in future lectures. But everything cannot be talked about in one lecture, right? You'll just get confused. So yes, something important to note, right? And this is important to know. So that means that you should note it. Whenever you have days, right? Listen, this is how you can decipher low probability weeks, right? And it's an easy way to decipher low probability weeks, right? Whenever you have weeks, whereas, and you'll see this coming before the week has, started. For example, the previous week, you can see that we had news events on every single day, right? That's low probability. Weeks which are not low probability, weeks that are high probability, they will have around, have news events on 3 days or less, right? So so less is more here, right? So price will expand more, or price will move away from the open of the week more, with the less news events that it has. Right? Why is that? Because whenever you have let's say there is a total, number divided among each day. So say you have 100 for the amount of liquidity, just, a random number. Here, right, you would have to split that liquidity. So you would have to put 20 on Monday, 20 on Tuesday, 20 on Wednesday, 20 on Thursday, and 20 on Friday. And that results in what? Consolidation. That results in the weekly range, barely moving. The days move, but the weekly range barely moves. Right? But whenever you have, for example, you have 70% of the liquidity, being, released on a Wednesday, for example, you just have 1 or 2 days that have client news events, then it's very easy for you to know where the high or low of the week will form. If you have 3 days of the week, right, and you know when to look for that sequential SMT, or that, sequential SMT between the days of the weeks, right? If you have, for example, next week, see, here we have 3 days that have, high news events. So it's highly probable that we will see that on Thursday for some asset classes, right? Highly probable. If not Thursday, it's Wednesday. And for some, the low of the week will be Wednesday. For some, it will be Thursday. And then that would create a cracking correlation, right? For Monday, what would you look for? You would look for a cracking correlation between Monday and Friday, right? That's exactly what you would look for. Here you can see that, right? This right here, this is the low of 2023, right? This is the high of 2023, and this is the high of 2023. Yes, it's now 2024. We have traded above here, which is why, we expected, price to pull back. If you guys remember, while price was trading above here, right? We got that, but, we had this high taken out before price actually returned back within the range. So here, right, and right here, we have the real quote-unquote turtle soup, just a run liquidity, right? We have these highs right here, these highs right here. We have this gap right here, right? And actually, I'm not supposed to be doing, what's it called? Analysis right now. Should be talking about entries mostly, but, this is what it is. And here you can see that we have these lows down here, which, would be a draw on liquidity. Price failed to trade below this low, did trade below this low. This was sequential SMT. So this is a shifted structure, right? The main thing is that we have sequential SMT here between 2023 and 2024. So here, and we're talking about entries now, right? You don't need, right, price to trade into a gap for an entry to be, there, right? Price does not need to trade into a gap, right? You can just do it and enter on the basis of, a precision swing point, such as right here, right? Here we had hidden sequential SMT and sequential SMT at the same time, right? Remember that you should focus on most, when you're looking at the triads, for the FX trade, you should focus mostly on the euro because it will deliver the most accurate price action, right? Whereas, there are times when the British pound will be lagging, but there are times when, just as how there's time when you will have the Dow lagging, right? Do you understand? So here we have sequential SMT, and here we have sequential SMT, a precision swing point, and then if you guys remember, right, we talked about, this consolidation right here, right, before we had this expansion move. And then here again, we had another precision swing, a precision candle right here, right, which led to price falling. So this is what we talked about the last time we met, right? And here you can see that the concept that we talked about, it fully played on, right? We had price just expand upwards, right? And that was due to the fact that we had sequential SMT here. And we did note here, right, which was the high of the week. It was Monday, right? And Monday had a cracking correlation between Friday, right? Monday traded above here. Here, price failed to break below this low, and the same thing occurred here. Then price just continued lower for, majority of the week. And this is where you will see, the magic in, expansion between the FX market and the futures trade. So here you see the FX market expanding, right? Expanding. But when you look at the futures market, what do you see? Right? You see price just stuck within a range. And this is what I mean when I say that whenever the FX market expands, right, you will see this during the futures market and vice versa. Right? This is what you'll see. So right here is where you will see, high probability entries come into play. So of course, this was caused by sequential SMT. That's why we had price going upwards, right? What makes sequential SMT high probability, right? There's one of two things that could make sequential SMT high probability. Well, there are three things that could cause that. So whenever you have, for example, you have sequential SMT occurring on a new week opening gap, whereas within another asset, it doesn't occur on a new week opening gap, or it doesn't reach for a new week opening gap, such as here, that creates a cracking correlation. On top of the cracking correlation that's already underway, right? So, and this usually happens within these conditions, right? And it's clear to note, right? Whenever we have price like this before Fridays, it's easy to know that price will continue within, or trade within the weekly range, because that's typically what what happens. Why did price continue like this into the weekly range? Tell me why. Because we had sequential SMT here. That's why. That's exactly why. Right? And it was on a new week opening gap. So that's not the only way that you could use it. Without, this, yes, the new week opening gap is useless. But also, if you mesh the new week opening gap, and you should be taking notes now, with, fair value gaps, that leads to high probability entries, right? New week opening gaps plus fair value gaps. So for example, if you have, right, a fair value gap such as this right here, right, overlapping with a new week opening gap, and this isn't the best price action, but, I like using, real price action that has been delivered recently to, depict these kind of moves, right? Whenever you have a new week opening gap overlap with a fair value gap, that creates high probability entries, right? Worse, and also here, right, where we had sequential SMT here. So between this low and this low right here, you treat here this area as an entry point, right? But you must look at the other quarter. So it's not that, once this happens here, you pay attention or you try to enter here. No, you wait until the other quarter. So if this occurred on Wednesday, then you would wait until Thursday for the, quote unquote entry to form, right? Price falls below this low, your stop would be here. And again, right, and the John liquidity would be here for the Dow. It's pretty obvious, right? It's just too obvious. Right? That's just too obvious, right? Whenever you see highs like this, they must be ran through. It's extremely low probability for them to just not be, right? For it to just be there like that. Another thing is that whenever you see, right, position swing points, right, you need to pay attention to them. Always pay attention to them. So such as here, where we have this precision swing point right here, in all honesty, you don't need to fall down on a lower time frame, which is why when price was here, we talked about the cracking correlation that was here, right, on the formation of this candle. That's a precision swing point. When the other day opens, right, this is for those of you that are lazy, right? Sometimes I am too, right? Here, precision candle, right here. What is this? Right? What's this? That's a precision. It's a precision candle. This right here would be another precision swing point, right? So we have a precision swing point here, another precision swing point here. It was obvious that this would continue lower, which is why we talked about the divergence that we had here. Once you see, for example, this is Monday, precision candle, price opens. Once it trades above the open, then you can be bearish, right? Once trade, cause why? First of all, we already have a cracking correlation here, right? There's already a cracking correlation here, right? This is hidden sequential SMT. Then we have sequential SMT here, and we had other cracking correlations, but we don't really need to talk about right now, but they're there, right? Just to make things simple, right? Here you can see that we have this low taken this low out already here, right? This one failed to do so. So what is that? What led to price, running above this high and below this low? The magneto effect. Do you understand? How does it work? So here we have the magneto effect, the leading cause of that. In between, this range and this range, which caused this cracking correlation, which was, certified by the precision swing points, right? So it's pretty obvious. Once you have another precision swing point here, or even this one could be used, and price trades into anywhere within the body of this candle. Once your stops above this high, or for example here, price trades above the open, it's above this high, you're safe. And you just go down to the lower time frame whenever you need more precision, right? Whenever you see a precision swing point right here, it's low probability that you will have a gap close, like right here, right? It will just expand, because after you have a correlation, right, between closures here, hidden sequential SMT, hidden SMT, right? And you have a precision swing point, what will happen? You will have expansion afterwards, right? And it's pretty simple. That's the main thing. And this is for those of you that you stay worried, or you're looking for something perfect. So you won't find something perfect, but this is the closest thing to perfection that you can get. You see, it's always there. It's always there. The cracking correlations, they're always there. It's just that sometimes, right? Sometimes when you place a trade, it goes against you, and that is normal, right? So the only problem that you have is a problem with yourself, right? That's the only thing. And for you to, triumph over that problem, for you to be successful, the thing to do is pretty simple. What is it? You must just, continue to make mistakes, not with real money, but making mistakes over and over again until you become numb to it. Then you begin to understand, I must, all I have to do is, manage my risk, and I'll be okay. If you lose, that is fine. That's totally okay. There are times when I go into the marketplace and I just risk like 0.25%, lose. It's like, okay, we're fired up now. It's time to go. just to get a feeling of, what it's come about. That I usually just do that whenever, I've been away from the charts for a very long time. So again, and you need to focus on this, right? Precision swing points, especially, those on the, daily precision swing points, can be used to dictate what? The direction of the weekly range, as long as on the lower time frame, right? And a daily precision swing point, to dictate the weekly range or the daily range, you would just look for the, matching cycle. So for example, you're trading the daily time frame. You go down into a lower time frame cycle, right? And then you look for sequential SMT. If it's there, you have sequential SMT within that precision swing point, then you have what you're looking for. And it's vice versa. If you see precision swing point within the cycle that, you favor, then you have a model right there as well. So yes, just to go over what we talked about, fair value gap plus new week opening gap. And day, so again, basically this is my settings, right? This is my settings. If you, want to see it. Right, so here, you can see that we had price, and we talked about this before, price trading above a new week open gap. Right, above here, what do we have? Sequential SMT. Here we had sequential SMT again, between the monthly cycle, then we had it here, between the weekly cycle. So we had a two-stage sequential SMT here, which was also, above this new opening gap or the weekly open, right? Looking at this, you can see that price reacts to the new week opening gap more than it reacts to, the candles, right? So here you can see we had this new week opening gap here, and this is something that we talked about. Whenever you have a high that is, within a new week opening gap, it will serve as a draw on liquidity for price. So here we had price being drawn here. Once price went above the new week opening gap, which this high was formed within, we had a creeping correlation, which led to price falling lower. Here you can see that we had this low form within this new opening gap, but there was no creeping correlation here, which is why we saw price continue lower. So turtle soup, how can you just use turtle soup, even without anything? And this would literally make you 50% accurate by not even looking at sequential SMT. It's when you add sequential SMT that is when you will have, more accuracy. So literally, right here, you have price trade above this high. Here, you can expect it to go lower, due to the fact that during this week right here, price is already, above the new opening gap, and 80% of the times, price returns to the new week opening gap, right? Here, just such as here, price trades above it, trades above here, creates sequential SMT here, creates it here, falls, returns back to it, and then just continue lower. Here, right? We saw price return back, as how we just talked about, return back to this new opening gap here, which is what we said happened 90% of the times, right? So on Fridays, what do you aim for as your low-hanging fruit? The current week's new week opening gap. So I hope that you found this useful, right? I hope that you take notes from this. And we will be back, and just to know when we will be back, you already know, we just look at the economic calendar. If there is no news on Monday, If there is news on Monday, then it will be Sunday, right? If there's no news Tuesday, which is the latest time which we will start, right? It will be on Monday, 6 p.m. Eastern Standard Time, right? So hopefully during Monday we will see some form of either expansion or consolidation to use to depict where we can expect the weekly range to go, the direction. With that being said, I hope that you found this useful, and we'll be back at Monday, 6 p.m. Eastern Standard Time.